Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
Cars and entertainment can be a winning combination. At least our strategists here think so. Shiraz Mian and Brian Boland going to actually tell us what that means in each of their stock picks, right? So we're going to start with you, Shiraz. You have the entertainment pick.
Yeah, it's actually entertainment. Yes, probably you could call it entertainment. It's a restaurant stock, a very unique restaurant idea. Dave & Buster's. Play is the ticker, 2.8 billion market cap.
It's because you can play games.
You could play games, and it's a casual dining restaurant. So they marry these two very unique and lucrative concepts of children's play and amusement type of activities, and then a regular a casual dining facility for the family itself.
Right.
Very strong growth profile. In fact, one of the most visible growth opportunity of any player that I know of in the restaurant space. They plan on raising their unit count by 10% annually, double-digit earnings and revenue growth opportunity for many, many years to come. Very strong margins too, very strong comp sales consistently over the last 4 to 5 years. A relatively new company as a stock. It went public in late 2014, has been a very strong performer. It's up about 20-21% a year to date, outperforming the S&P as well as the Zacks restaurant space. I really liked it for quite a while. Continued to like it. I had it in the top 10 last year and was a strong performer there. It's a Zacks ranked number 1 now. Following the last earnings release and positive commentary about the outlook, estimates have been consistently growing up.
Yeah.
And overall, a very good story in the consumer and domestic-oriented end of the market.
Momentum score is not so bad either.
Momentum should be good. Growth should be good. May not come across as good on the value score, but overall on the conventional valuation metrics like the regular PE, the forward 12 months, it's right around the average for the peer group.
All right, driving on over to Brian.
When I'm at Dave & Buster's, I love to play the racing games.
That's right. Yeah.
There you go.
Right? Play, race.
That's
games.
right.
In
Yeah.
games.
Equals entertainment.
Yeah.
Right. I'm just trying to use the two tickers there. Play, race.
That's right.
How creative.
Another joke that fell flat, just like the others before it.
You're into the driving mode because you have Ferrari.
That's right. And normally when I'm here, I talk about Tesla. But Tesla is a number 4, so we shy away from those sorts of things. That's an increase from a number 5, by the way. So maybe your earnings estimates are moving the right way. I don't know. That or everybody else's earnings are moving the terrible, even worse than Tesla's.
That's right.
But Ferrari is obviously they make the expensive cars, and when we talk about like how many cars do you think Ferrari makes, and how many cars Tesla is going to ship right around 100,000 this year. Ford and GM are selling in the hundreds of thousands, millions. Ferrari is only going to sell 8,400 cars, but has a $16 billion market cap. So you try to do the math on those things, and that makes each one of those cars worth a lot of money, basically, right? But I think we knew that already. The stock is a Zacks rank number 1 strong buy, as we have for most of these. And I, of course, love that it has an A for growth and an F for value. I love to see that divergence there. Growth investors should be looking for something the opposite of what value investors are, and I am a growth sort of guy. And if we take a look at the, why this is a rank 1, we can see that the earnings estimates have moved up. For 2017, we've moved from $2.50 to $2.67. And then for next year, it's $2.84 up to $3.06. And that's because of the most recent beat. where earnings came in with a positive earnings surprise of 30%. And we look at the last few reports, we see that that is not just an aberration here. The last 4 quarters have averaged a positive earnings surprise of 31%.
Yeah.
So if we continue to see earnings come in ahead of expectations like they have Ferrari, there's no doubt that the stock will continue to move higher. And the stock, by the way, is up 110% since January 5th of last year, whereas Tesla is up only 70% since last year. So which car company is racing ahead? Which one should we really be talking about, Tesla or Ferrari?
Well, Ferrari doesn't have a self-driving car yet, but
That's right. I mean, when you're paying that much money for a car, I think it's because you want to drive it around. I think there's a little bit more excitement in that. Even though I believe a Tesla, against most of those Ferraris, the Tesla would actually win in a 0 to 60 race.
Wow.
Don't quote me on that one, even though this is on tape. But I'm not that much of a car guy. But I'm pretty sure the engine on the Tesla is just a little bit stronger.
Yeah, we'll keep it just between us.
Okay, good.
That's
right. Do either of you own it?
No.
I don't own a Ferrari, no.
Okay. Or the stock.
Or the stock.
All right, good. That's kind of what I figured. Don't forget, you can find out more information on these 2 stocks as well as many others on our website, Zacks.com. All you need to do to get started is make your way over to the homepage and link to it all from there. With Shiraz and Brian, I'm Terry Ruffalo.